what if there was a way to appeal to value investors and Wall Street degenerates at the same time? So, a lot of you may have seen that I've already covered medical properties trust a couple times on this channel, since it's a pretty good size position in my portfolio, and a lot has been going on with it in recent days. So this is a medical REIT that leases out hospitals under triple net leases to various medical groups. And, they have been beaten and pummeled into the absolute dirt because of a number of different things that I'll just refer to as choppy waters with some of their tenants and with rising interest rates and the like. So at this point in time, they pay an absurdly high dividend yield of 15%, which, by the way, is, in terms of their forward guidance, at least for the rest of 2023, well covered by their funds from operations. So a pretty good chance that this dividend actually stays intact for the immediate future in any case. And when you look at the shareholders' equity on the balance sheet, you've got almost $8.6 billion worth of equity. That's liabilities subtracted off of the assets, gets you to the equity. So essentially, that's like the headroom they have if they were to sell everything at face value and pay off all debts at face value. Okay. And their market cap is trading at a substantial discount to the balance sheet today. But what if I also told you that there is substantial short interest in this company? So out of the, I think it's around 600 million total shares in this company, as of right now anyway, it's showing on Fintel as 110.5 million shares sold short. Now, when somebody sells shares short, they have borrowed the shares themselves from their broker, essentially, and sold those shares. Maybe they sold them at $11 or $12 or $10 or something, and the current share price is now down to $7.73. But in order to repay the person that they borrowed the shares from, the broker, whatever, they have to at some point buy back the shares to close the short position. Now, 110.5 million shares is an awful lot of shares. Almost 20% of the shares outstanding. And granted, it's Sunday night at the time I'm recording this, so come Monday morning, this may all actually change because they may start to buy out of these short positions. But for just comparison's sake, AMC, also on Fintel, has a short interest of like 24%. Okay, so more short interest in AMC for sure. But I mean, this is a company that's like actually kind of circling the drain. Like, there was maybe an argument for the comeback play, etc., during all of the lockdowns of the pandemic and everything. But I mean, the movie theaters have been open for a while now, okay? But they just keep bleeding and keep bleeding and keep bleeding and keep diluting and keep diluting and keep diluting. Now, REITs like MPW do typically issue shares in order to purchase new properties. That's a normal thing for them. It's not necessarily a sign of bad things. However, they are actually going the opposite direction, or maybe going the opposite direction, because back in October, the board of directors approved a buyback of up to $500 million between October 2022 and October 2023. So there's a there's a chance of some kind that while all of this short interest is, going on in MPW, they might buy back shares while they're on sale like this. Now, when it comes to the closing of the short positions here, if there's a lot of buying happening when they go to do it, and then they go to buy back shares, that can very, very rapidly drive up the price of the stock over a very short period of time, because on an open market, it's supply and demand. So the more buy orders are being placed, the higher the price gets bid up in the short run. So, and I am not like a, I'm not a technical analysis or short squeeze type person, but I just think to myself like, hey, maybe this is the squeeze that has not yet squoze and would be the mother of all squeezes potentially. So I just think it's interesting that people are more interested in trying to get a short squeeze out of something like AMC, where if it doesn't happen, they have no chance really, in my mind, of getting any kind of real return on diamond handing that stock, right? But on something like MPW, they've got a really good-looking balance sheet as of right now. They've got a very substantial, almost insane dividend that is, at least, for the moment, appears to be well covered by funds from operations. So, this is a business that has a track record of making money and, is experiencing choppy waters right now, but has a history of navigating choppy waters successfully. And, but yet there's way more interest from that crowd in AMC. And I don't get that disconnect. And I feel like this is one of those rare cases where the value community and the degenerates almost would be kind of, have their interests aligned and both be interested in this company. So that's just, my hot take on the subject of short squeezes. And I guess another way to another angle of how to look at Medical Properties Trust. Give me a comment below. Let me know if you think it's the squeeze that hasn't been squoze, and if you're diamond hands on Medical Properties Trust. I'm in it for the long run because I just think hospitals aren't going anywhere, and as the baby boomer generation continues to age and retire, they're going to need more beds in hospitals, for all the various late life medical needs they have, not fewer hospitals. So, and let me know if you agree, disagree. Call me a freaking degenerate bozo if you want. I think personally that this is a perfectly reasonable thing to buy into, but I don't know. Maybe I'm a nub. Peace.